All right, all right, all right. We are back for the second time in 1 week. Welcome back to Spark Spaces. And in this particular case, we've got the Spark Spaces Spark Tokenization Grand Prix Special Edition with an amazing panel with an incredibly auspicious guest that have joined us today. So we thank everyone that is obviously tuning in for today's special edition. And we're going to be talking all about the Spark Tokenization Grand Prix that was announced last week and will be concluded soon with the Spark Spell being deployed on the 7th of April. But thank you all for dialing in. We've got a jam-packed session with some very interesting topics, and we want to give a deep dive into exactly what the Spark Tokenization Grand Prix is all about. So welcome, 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 everyone on the panel. I know we're all sitting across the world, and some might be sitting under the sea. Others have a blue haze on them. But we take this opportunity, obviously, to thank everyone for making time out of their busy day to join us and to talk about what we believe is the future of finance, and obviously, and a very exciting time for not only crypto or DeFi, but also a very exciting time for CeFi, where we're coming to the middle and we're merging the spaces, and it's going to be an awesome future of finance that we're collectively building. So with that in mind, Sam, welcome back. It's the second time, obviously, we're having a spaces this week. Thank you for joining us. I know you're also busy. So Sam, would you care to just give us a quick recap on the GP? Of course, we're still yet to conclude everything, but just give us a quick recap on the GP campaign.
Yeah. So hello, everybody. I think this is our fourth edition that we're doing this now. So to those who have kept joining, welcome again. Thanks for sticking with us. So yeah, let me run over the lead up and the history leading up into the Grand Prix and how that all went. So Sky, formerly known as MakerDAO back in the day, has been a big advocate for real world assets basically since the beginning. Real world assets are one of the killer use cases of DeFi. And although people don't really think of them as real world assets, stablecoins are real world assets. And this has been just one of the killer use cases over the years. So, the interest rates were low. Stablecoins were really kicking off, but leading into 2022, the interest rates started going up in TradFi. The Fed was raising rates. And so the natural response for this at the time, because there were not tokenized treasury bill products available like there are today, there was outflows and leaving the crypto space because people wanted those higher yields in TradFi. And so Maker, as one of the largest on-chain stablecoins at the time, was receiving zero yield for holding a lot of its backing in USDC at the time. And so it's quite natural to move some of this backing into yield-bearing treasury products. So initially, this was done. We just Maker just wanted to get this online as quickly as possible to get access to the yield. So sort of temporary off-chain solution was worked out where Maker would just move the funds off-chain and then get the yield and then bring it back on-chain. But starting in 2022 and really is picking up speed now, there's been introduction of tokenized treasury products such as BIDL, USTB from Superstate, and Centrifuge JTRSY. And so these products allow, call it Sky now, still confused on the naming sometimes. The Sky balance sheet can now be allocated directly into tokenized treasury bill products such that the accounting remains on-chain and fully visible to everybody. So Spark, newly launched SubDAO, is facilitating this investment into the tokenized treasury bill products. And as summer last year, we recognized this space was maturing to the point of where we wanted to move the allocation from the off-chain to the on-chain tokenized products. And so the Grand Prix was launched. And the three partners you see here today are the ones that have won the Grand Prix. And we just announced that last week at the RWA Summit in New York, along with the big billboard. Lots of people thought it was pretty cool. And so, yeah, this is very exciting. We're going to be putting this allocation into action on April 7th, as Phil mentioned. and we're just going to be ramping it up very quickly. You'll see a rapid switch of the balance sheet. The previous product that was labeled as Andromeda, which was Block Tower doing the off-chain investment, is being unwound slowly. I think there's still about 700 million in there that's slowly being unwound into the USDC backing, which will then be moved into the three partners that you see here.
Thank you very much, Sam. Awesome. I just want to also run around the room quickly, theoretically, of course, and introduce everyone. So, and give you all each an opportunity to just present, obviously, yourselves and a little bit background of the company and the project that you're working with. So, Martin, we'll start with you and we'll just work anti-clockwise if that's okay. Martin, how's it going on your side?
Yeah, hi everybody. Thanks for having me here. Martin, co-founder of Centrifuge. We're one of the OGs in RWA. Started in late 2017. Our journey being an early partner for back in the day Maker, now Sky. We're starting kind of smaller RWA vaults, private credit, and all these things. I think missed a little bit on the T-bill journey. We're a late joiner, but I think this starting Anemoy in parallel as a web-based asset manager, the partnership had with TradFi, Janice Henderson, that's the J behind the J Treasury token, JTRSY, kind of, give us most likely also kind of the credibility and building the infrastructure where I think technology, centrifuge, and I think, the back office, how to manage a fund like this and make it credible, as, a wiring that works, traditional world, and our crypto world, to participate here. And thanks for the trust and the long lasting partnership. Handing it over to Carlos, maybe.
Yes, thank you. My name is Carlos Domingo. I'm the co-founder and CEO of Securitize. We're also an OG in the space. We started like Martin around the same time, and we actually partnered for many years because we had at some point complementary products. We've been doing tokenization since the industry was not even called RWAs like now, but before that. And then I think in 2024, and this was kind of a bit of a pivotal moment for everybody when this whole trend of tokenized treasuries launched. I think Robert launched like a few months before we did with BlackRock, but at that time we partnered with BlackRock. The whole tokenized treasury industry was around 750 million or so, if I remember, when we launched. It sits now at 5.2 billion. We are like, I think we're 50 million away from 2 billion now. If somebody has some spare change to get us over the finish line for the first 2 billion product. And then when we've been following, obviously, what Maker and now Sky has been doing in terms of RWAs through Centrifuge. So when they had the Spark, Grand Prix allocation, we were very excited about it. We were very surprised about the amount of people that submitted proposals. I think we're like 44, which then we're down to like 36 or something like that. So that shows the amount of interest for the crypto industry to be part of this project, which obviously is one of the OG DeFi projects in the space. So we're very pleased to be here in such a great company with Centrifuge and Superstate as one of the three winners of the Grand Prix.
Thank you, Carlos. Robert?
Yeah, so I'm Robert, the founder of Superstate. I've been a longtime fan of MakerDAO and now Sky. Been following the project since I came into the crypto space in 2017, building a DeFi protocol. And so it's been a long time dream to work so closely with, this DeFi protocol and ecosystem. And what I think we bring special and unique to the table at Superstate is how we're building the on-chain components of our tokenized T-bills and the interfaces that are available to a protocol like Spark and Sky. We've launched some features over the last couple of months, really with Spark and Sky in mind, which is, continuous pricing of the product. It accrues interest by the second as opposed to in business days, and on-chain minting and redemption contracts tied to this real-time price. And so a protocol like Spark and Sky can have access to yield, in the same format that, the underlying protocol works, which is it works 24/7 and it works, by the block. It doesn't work by the day. And so we're really excited about, the tools that we've been developing for such a marquee DeFi protocol. And hopefully, amongst the three of us as T-Bill providers, to Spark, we really start to demonstrate, what the future of composability looks like between, off-chain yield and on-chain DeFi protocols. And I think it's going to continue to improve. I mean, we're essentially at a starting point from a technological perspective. This is, an extremely prominent test case for the industry, but it's the beginning. I think over the next couple of years, we're all going to be developing, really interesting new products, solutions, and flows together. And so I'm really excited about the future of Spark and Sky, and can't wait to see where it goes.
Awesome.
I think if you allow me, what Robert mentioned is very important for somebody that has been in this space for many years. I think part of the reason of why tokenization didn't take off at the beginning was because just using a better ledger to represent your securities is not good enough to interact with the rest of the crypto ecosystem, right? Also, arguably, the crypto ecosystem didn't exist. So when I started the company, the whole crypto space was like 200 billion, stable coins were like 5 billion. DeFi didn't exist. I mean, I guess maybe you guys, Compound Rover, started more or less at the same time, and Aave, but it was very small. So if you fast forward now, first, crypto is really big. Is I don't know, like over 3 trillion or whatever it is now. It keeps going up and down, but it's a very, very large economy. DeFi is also very mature and very large. And then now the tokenization projects have actual more on-chain utility, right? So it's not just using a better ledger, but you can do peer-to-peer transfers, you can do instant redemptions, you can do all other cool stuff that traditional securities representations in traditional ledgers are not capable of dealing with. So another thing, this is what will lead to a much bigger growth than what we've seen so far, which has been amazing anyway. But I think it's going to keep growing at a much faster pace.
Yeah, I echo that. So back to your point, Carlos. 44 participants and 36, and now the three of us is amazing, but really shows that this is really kind of the path forward, and Sky has basically opened the door where the first real steps how DeFi is starting to disrupt TradFi, I think, and how we can basically kind of looking at Bitcoin. Trustless way basically to store the value and kind of be independent from the traditional finance system, and Sky being really for me really the step of trustless money, and kind of taking that forward, basically building then yield structures where step by step, maybe Robert, back to your point, yield calculated by a second, that's DeFi built basically more and more trustless yield sources, which are also rooted in the real world.
Yeah, and I'll echo that. So, like from the Spark perspective, historically we've been fairly constrained about what we can invest into. You guys are kind of coming like bridging from the TradFi into DeFi, and like we started in completely on chain, so we have to like go into investment opportunities that are available, and the legal system integrations have like taken quite a while to get up and running. And so like historically, really the only there's like really you could only do over collateralized crypto lending. I mean, you could do under collateralized too, but that's quite dangerous. Over collateralized crypto lending has been like the main activity of DeFi along with trading that's been around so far. So it's very recent that we've gotten these new rails in place for just starting to branch out beyond the basics. So so there's over collateralized crypto lending. There was stable coins that are available. Now it's tokenized treasury bills as the next available thing. We've also gotten the basis trade opened up as well. But I think this is just the beginning, and we're going to see like more things, tokenization, investment opportunities coming on chain. Corporate debt seems like a next step, but I think eventually it will get into things like private credit and whatnot, so that it really gets like there's really like a huge option of investment opportunities available on chain, and the capital efficiency that comes from being on chain is just is what makes this all inevitable in my view. So like I'm starting to get a little glimpse into the TradFi world. It's very clunky, it's very spreadsheet, T0, T1 settlement and stuff like that, but it doesn't need to be that way. So I think this is all inevitable.
Yeah, so this is given the one that I'm maybe interacting more with the TradFi to try to bring them to crypto as opposed to, let's say, Super State, which I'm sometimes jealous about the things they do because it's more difficult to do it when you have a full TradFi asset manager. First, I think you got to give them some credit to start coming into the space because their credibility has also helped move the needle. And the reason there's so many products and so much adoption is also because these large, credible TradFi asset managers are coming, like BlackRock, or in the case of Centrifuge, Janus Henderson, or Franklin Templeton, and others. At the same time, this is when you start realizing about the problems of trying to marry a 24/7 instant world like crypto with a world that is not 24/7, that is analog, and that is not instant. So how to solve those problems and how to marry the two worlds, it's a very interesting problem because ultimately they also want to be able to do those things, right? Because why not? I mean, why not being able to issue securities instantly, or why not being able to have instant pricing and stuff like that? But sometimes their internal way of working, or their providers, because sometimes it's not the asset manager but their fund admins or the custodians, they just don't have the systems or the ability to operate that way, right? So I think that as we kind of push the envelope, and I think that more native, let's say, crypto asset managers push the envelope, it shows the other people how they need to basically start modifying the way they operate and etc. to be able to adapt to this 24/7 instant world that is crypto.
And that brings up a really interesting point, which is, the architecture of all three of these solutions is a little bit different under the hood from a business and technology and structure perspective. So, at Superstate, one of the things that enables us to do these, high-tech features earlier is that we're the asset manager and the tokenization of it. And so it's, consolidated between management and the product versus, a BIDL where there's, BlackRock, which is, distinct from Securitize. You know, and then in Centrifuge's product, there's also like nuances and differences to these. And so, what's interesting is I think that all of these different structures and approaches will lead to different experiences. And even like a single product like T-bills, you actually wind up getting multiple extremely differentiated products and workflows from. And so it's really interesting just to observe, from a top-down level, like how all of this is, still, even though it's almost identical returns and fees, can have differentiated approaches.
I think that's absolutely true. Like, we, since the beginning, have taken the position that we want to kind of bridge TradFi with crypto, working with traditional asset managers. That's a kind of like a more complex process, if you want, because you need to have certain licenses to be able to serve a third party as opposed to manage your own assets that are, SEC registered transfer agent, broker dealer, and stuff like that, which obviously has a burden in terms of compliance rules, yearly examinations with the SEC and stuff like that. And that obviously moves at a different pace than a native asset manager, let's say like Robert Martin. I think, and Animo, you guys are a hybrid because you have a sub-advisor, but the asset manager itself is native. It also brings the other advantage of bringing these players with their own like kind of heritage of doing asset management and their size and their brand into the space, which I think brings credibility. But as Robert said, you end up with products that from the outside they look the same, but in reality they're not exactly the same, right? Like, I'm here representing Securitize because we are the BlackRock tokenization platform and distribution. But when you invest in BIDL, Securitize doesn't do anything in terms of like touching the money. I mean, we bring the money into the fund, but the money goes to BlackRock. BlackRock manages the money. BlackRock decides how to invest in treasuries and how to manage the duration. The treasuries are in BY Mellon, etc., which is a very different thing that investing directly in an asset manager, like an on-chain asset manager. So,
yeah, I think that's, Sam, maybe a question to you. So they most likely said, "Hey, I would like to diversify technical risk. I would like to diversify most likely also the different legal frameworks." And at the end, I think all three of us have very solid technology layers, even with different approaches, and very, I think, legal frameworks where the token itself brings credibility and off-chain recourse. So I think that it was part of the decision-making process, I guess, then.
Yeah, I mean, there were a number of factors going into the decision making. It was primarily what you think it would be. I mean, fees and like partnership relations, kind of stuff. But the technology I'm a technical person, so I always find it very interesting, some of the innovations that are being come up with, and I think we're in kind of like a test phase to see what really works, and we'll iterate and improve collectively once we start really testing this stuff out in practice.
All right. I love that the conversation obviously took a natural flow, which is awesome. You guys feed off each other really, really well. I want to just maybe we're entering into a little bit more clarity here in terms of legal frameworks and sort of compliance and regulatory requirements of organizations. I'd love to get opinions from each on what does that ideal scenario look like in terms of the legal frameworks that would obviously encourage a flourishing business both for the institution and the end user.
Who wants to start? So I start.
Go for it, Carlos.
So in our case, as I mentioned, we're not an asset manager. So we don't take investment decisions for the products that we tokenize. We don't purchase the underlying assets to produce returns, etc. So we are a service provider that acts as a transfer agent, and then we use a public distributed ledger, which is a public blockchain, as the way to represent the securities. Every transfer agent uses a ledger. Unfortunately, most transfer agents uses very outdated ledgers. We happen to use a much modern one that allow us to do more fancy stuff. And then we also are a broker dealer. So we actually can sell third-party products. Like if you have your own product, you don't need a broker dealer. You're selling your own securities. If you're selling third-party products, you have to be a registered broker dealer with the SEC. So from that perspective, we are highly regulated, both as a service provider to a TradFi institution as well as a distributor. Broker dealers are regulated in a much more strict way than transfer agents are. So yes, compliance obviously is a very important thing for us, and I guess this is why traditional asset managers choose us as their provider, right? Because we're probably the only one in the industry that has this combination of licenses and so far clean record in terms of not having going to trouble with anybody, with the regulators, etc. So that's kind of our situation. And then the asset manager in our case is BlackRock. So they are the investment manager for the fund. The fund is registered under their name. They take the investment decisions. They update the PPM. They all do all that stuff that we don't do.
Awesome, thanks, Carlos. Robert.
Yeah, so we're similar in some regards. So at Superstate, we're an asset manager and a transfer agent. And those are the two sort of like building blocks that we use, from a legal and compliance perspective. The primary difference being that, we're not working with third-party asset managers. That part is in-house. And so, I think over time, we might see more experimentation about, asset managers versus sub-advisors versus using other products and just wrapping them and not really having management therein. And I think we're going to see more experimentation around, transfer agents, are they necessary? Who uses them? How do they work? And like what's a part of running these products? To flag one difference, we're not a broker dealer like Securitize is. And so, we're focused on our own products.
Yeah, I would most likely say we are a hybrid of the two or not. So kind of going not that far if it comes to distribution, brokerage like Securitize. On the other end, also most likely not going that far as you do, Robert, with asset management. So we looking at actually how to approach it and decided to build a structure where we can abstract technology and legal risk for asset managers who would like to be blockchain ready. Basically connect their products and the asset management skills they're having to a new distribution channel, first the blockchain, and helping them there, and to build basically a structure which is very similar to what BlackRock did with you, Carlos. So it's a BVI regulated fund, so we are fully regulated, have a fund administrator, have an auditor, etc. So basically, where you need to trust us an asset manager, but fully regulated asset manager that like everyone else, and even kind of saying, coming back to your point, Robert, that we are most likely managing T-bills honestly is not that difficult. That's also why I think T-bills being adopted in the first place. But if you kind of go beyond T-bills into other asset classes, I think we just do not want to build that expertise in-house, and believing that asset expertise, judging risk, do origination and managing assets carefully is something where you need experts in the specific asset classes, and trying to be a service provider supporting, a multi-asset manager approach, and having best in class partners for the different asset classes is what we feel a very good approach and way forward.
I guess it just depends where you want to build expertise, right? So if you want to be an asset manager and a tokenization platform and a transfer agent, then you need to be good at all those things to be competitive, right? And treasury is probably, because it has some art to how you track the Fed funding rate as closely as possible, etc. But it's a very simple product at the end of the day, right? Nevertheless, companies like BlackRock, they manage $850 billion in cash products, right? So BL now starts to be relevant, but it was like a very tiny thing in the bigger scheme of the things they do. But once you get into more complex products, then asset managers, that's what they do for a living. So for us, we decided not to compete with our customers and not try to build that in-house expertise, because we also have other products that are like credit products and stuff like that are a lot more complicated to be able to do well, right? So, but I get the point of, like, if you're your own asset manager, you control your own destiny, and therefore you have more flexibility in terms of doing things. I think it's a balance between the two.
Carlos, I want to elaborate on that a little bit further and open it back to the room, just in terms of the complexity of product and the demand factor and / education required. What are you all individually doing just to address the demand? Because I can imagine we're not developing all these innovative products with zero demand, at a user face perspective. What are we doing to obviously address that demand, be it either locally or internationally? What does that demand look like? And then just how do we, as an industry, move forward in terms of making sure that these crypto-orientated products are not as complicated for maybe more of a traditional investor? Carlos, we'll start with you, and then we can move it around there.
Sure. I mean, we've tried a little bit of everything over the years. So this has been a trial and error. I remember the early days, a lot of people were very excited about tokenized real estate. Because there's this misperception that when you tokenize something, you make it liquid, which is not necessarily true. You settle better trades, but that doesn't necessarily mean that the product itself is going to be liquid. And then you realize that certain asset classes like real estate are very complicated for people to understand whether they're good or bad investments, right? And then also, if you think about RWAs as a way to kind of interact with DeFi for the most part works well with yield-bearing assets or that they increase in price, that are also easy to transfer, that are fully liquid or semi-liquid, that you can get frequent NAV on-chain about the value of the underlying asset, etc. So all those assets like real estate or private equity, which we've done some projects, I think they're not very suitable for what we do. If you look at, I think Sam mentioned at the beginning, the largest tokenized real world asset out there is the dollar, right? So I think that if you trickle down from the dollar, you get treasuries, and then farther down the road, you get credit, and then in between, there's a bunch of other things, bonds, floating rate products, etc., which I think is where the sweet spot is today for the industry, especially thinking that yields are not going to stay high forever. And then as yields come down, you want to bring higher yield, maybe a higher, risk, maybe a higher, like a slightly lower liquidity, etc. Products that cover that range that will play well with, like the DeFi protocols, right? So that's the area where we're focusing. And then in terms of educating about the quality of the product, our approach is just to partner with non-brand names that people will recognize, right? Like if you say Apollo is the largest, private credit company in the world, so you don't need to like sell the credibility of the underlying asset. Because otherwise, educating people about whether this credit fund is good or bad is a very, very complex thing that not even professional investors necessarily know how to do it. So,
yeah, very true. Awesome. Thanks, Robert.
Yeah. So demand is a complex topic, right? I mean, at this point, the demand for T-bills is proving itself out in real time, right? A year ago, the demand was relatively low, but it's increasing by the day, by the week. And I think we're seeing that in all the traction that these products are getting. I think there's less demand as you start to go out into different assets, right? There's a lot less demand for private credit right now. There's a lot less demand for real estate. There's a lot less demand for fill in the blank, right? We haven't really seen other asset classes take off. And I think, the trend, if it continues, will be we see something find product market fit and succeed wildly, like stablecoins. We'll see the next thing find product market fit and succeed wildly, like treasuries. And then eventually we'll get to a point where everybody's ready for the next asset class. Once everyone gets comfortable building out, movement of funds without, price go up, they get comfortable with moving around funds with price go up, and they get comfortable with moving around funds, but maybe with more credit risk or duration risk or whatever it is, where, it might have a little volatility as it goes up, but we've built out the systems and iterated on the systems over time to be flexible and comfortable with those characteristics. I don't think a DeFi protocol for the most part, is as ready for private credit as it is for T-bills, which is almost like just like, a dynamic line that, accrues without really any risk. And so we're going to see it. I think when it happens, it'll sort of happen all at once, where it'll be like, okay, the world's ready for something like slightly riskier. We start to see, as a whole, the growth across, products. But I think right now we're still firmly in the camp of, treasuries are where most of the growth is probably going to happen over the next 2 years.
I just want to mention something. So treasuries, tokenized treasuries today is around 5 billion, right? And then private credit, between the two funds that we have with Apollo and Hamilton Lane, plus let's say a few others, is probably 100 million. We're probably like 70% of that, because there is crypto credit, which is not really the same. I'm talking about private credit funds that are on chain, which is primarily the two funds we have, and then some other smaller players. So today, treasuries is 50 times, tokenized treasuries is 50 times bigger than private credit. So it's not that far apart about the difference in TradFi, right? Because in TradFi, treasuries are like, 30 trillion, and private credit is like 1 trillion or something like that. So the private credit is never going to be as big as treasuries, because naturally it's not as big as treasuries in the real world. But the difference between the two spaces is not that far apart from the difference in the TradFi markets. So I think that, and of course, private credit has other issues with integrating with DeFi, which is, it's not instant liquid. You don't get instant NAVs, even though you can recalculate it. Like, there's other issues with integration, but I think that as an asset class is more or less what it should be compared to the traditional markets. So.
Yeah, and I can speak a bit about, so where's the demand going to come from? Like, we're actually just about to increase it by a huge amount. So like, the market stands at 5 billion right now. The Grand Prix was for 1 billion, but current market conditions, if things can always change in a couple of weeks, but as of right now, we're looking at adding another like 3.5 billion-ish to the tokenized treasury bill market, just because we have in Sky, there is, let's see, with Cash RWA, there's, so in the off-chain portion, that's 850 million, and then there's 4.77 billion sitting in USDC right now. And so you need to maintain some of that USDC for peg liquidity, but beyond that, that can all just be deployed into treasury bills. So the market's about to grow. The demand, the big portion of the demand is stablecoins, stablecoins.
Yeah. So
I think it's stablecoin.
I think,
treasury management, right? On-chain treasury management.
Yeah.
Because a lot of the companies need to put their treasury somewhere. And keep in mind that even though, even when interest rates are low, the treasuries markets are still huge. You don't actually see them like, going down to like zero because interest rates go down, right? So I think even if the interest rates come down to like a 3%, which I think is the historical average, except for the years of like zero interest rates, I think treasuries will continue being large, tokenized treasuries, and will continue growing. Because at the end of the day, is the only place where you can put money in a very, very safe way, right? And a very liquid way. So there is no other asset class that will actually beat the security and the liquidity of the treasury markets. So
yeah, exactly. It's the default place to park your cash.
Absolutely. And it's maybe the first, traditional finance product, which is may even, I think, originally issued as a token sooner or later. So I could imagine, that the U.S. Treasury, Bank of England, et cetera, is natively issuing a treasury bill or a gilt or whatever on a blockchain. But coming back to the point of demand, I think we still live in a twofold world. We have two different investor classes, on-chain, off-chain. And the typical on-chain investor is, of course, growing up with crypto assets and understands crypto assets and has a completely different view on risk and return. And traditional investors come from a complete different angle. Think about diversification, maturity risk, risk-adjusted return, et cetera, et cetera. And no surprise, if you just compare Bitcoin ETFs and all the other crypto ETFs, opening up crypto assets to the traditional world, that is order of magnitude bigger of what we are talking about here with tokenized treasuries yet, and I think we are about to turn the world that basically more and more of those investors understanding crypto and moving crypto and understanding the value of a token. And I think really stablecoin is the way to go, so, and kind of what Sky is doing here is kind of using those yields, sharing it with the user, and building basically the rails of kind of, the future financial system is, and being part of this is what I feel is needed now, So without stable coins and actually a payment infrastructure, it will not work. That's also what has paved the way for DeFi being a success. It was the advent of stable coins first made DeFi for crypto assets, and now we may starting to eat TradFi.
I think you need to look at where treasuries are being used in TradFi markets, right? Because one way is treasury management. That's fine, which is kind of the equivalent of what most people are doing today. Either they're on treasuries or stable coins backing and stuff like that. But where the big volumes for TradFi markets on the usage of treasury are repo, collateral for derivatives tradings, etc. That has not really started in this space yet. People are still posting stable coins as collateral in derivatives tradings in crypto, right? So this is something that I know everybody's chasing, and it has different complexities in terms of getting it implemented, because stable coins are permissionless and tokenized treasuries are permissioned by nature because they're securities. But when that happens, there is no reason for you to post a stable coin if you can post a high quality tokenized treasury product, because with stable coins, you're not supposed to get the yield. But we all know that that's not true, that everybody's behind the scenes sharing the yield, pretending it's like a marketing reward, so they don't call them securities. But in any case, it's a not transparent way, right? Like, you're not getting the full yield. You don't know what you're going to get because you're subject to whatever marketing reward agreement the issuer wants to give you, etc. While on treasuries, these are securities. It's very black and white. There's a contract, there's a subscription agreement, there's a PPM that tells you exactly what you're going to get, and contractually you can't just change that unilaterally, right? So I think that tokenized treasuries naturally will replace stable coins in a lot of those more institutional usage. Stable coins will continue being great for like payments and for other more like retail applications, the same way people pay with dollars and not with treasuries. But institutions would naturally migrate from stable coins to treasuries because it makes sense.
So we've obviously passed a very positive turning point just in terms of government adoption and embracing the crypto/tokenized, worlds. There is somewhat lag on the Fed front, with Powell and the team kind of like not really making a direct statement of embrace. What role do you guys think that the Fed still has to play with all of the treasury or rather the ability for a proper treasury to be tokenized?
I mean, that's a hard question. I'll just jump in first. I think, at some point we'll see, this come from, the sort of government and institutional side. It's not going to come from, I think, a company of any of our size in the space to start. But I think at some point we're going to start seeing, treasuries that are natively issued on chain, right? I think it'll take a long time for the appropriate institutions to build out the infrastructure for this and also the use case for this, but it will happen. It's a question of when, not if. I think the when is probably 10 years, frankly, as opposed to next year. We do have in the US at least like the most innovation and crypto forward legislative body and regulatory body that I think that we've ever had, frankly. And so maybe 2 or 3 years from now we see someone try to pilot this in like some limited way, but I still think it's a very long way off before we have crypto natively issued treasuries.
I agree.
Martin?
Yeah, I agree. So we are just at the beginning. T-bills is tokenizing T-bills is the first step, and I think what it will help most likely creating stablecoin adoption for the real world. I think that needs to continue, and then from there, adding more asset classes and basically building the trading infrastructure and actually structures for deep liquidity on chain, and that is eventually also enabling private credit. So where I am skeptic about private credit at the moment, or being at least a collateral maybe for the likes of Sky, if it comes to risk, maturity, etc. Where you most likely there is a few layers missing in between to make it really a great collateral for a stablecoin issuer, I guess.
Yeah, I mean, as of the last cut of stablecoin legislation, I don't think it envisions anything riskier than treasuries or bank deposits as being acceptable backing for stablecoins issued out of the U.S., et cetera, et cetera, et cetera. So, I think we might see more experimentation in foreign jurisdictions, right? We might see stablecoins backed by private credit as long as they figure out how to manage the liquidity of the backing and all of that. And it could be incredibly interesting, but I think we're going to start to see a pretty packaged and streamlined answer to what is a stable coin. And I think it's going to reach a level of conformity pretty soon.
Yeah, Robert, you mentioned 10-year timeline. That in crypto spaces is basically
7 years. Yeah.
Yeah. We might all be dead by that stage. But I mean, yeah, it's crypto obviously 24/7 never sleeps, moves incredibly fast. I just wonder, if the laggards can keep up before technology kind of circumnavigates the need for a central organization's involvement, right? But yeah, I think also just obviously things are coming to fruition on the 7th of April, and it's an exciting time for this to all be realized eventually. Do you guys have a plan of action? What that, obviously you don't have to give us too much detail, but what does that plan look like for the first 3 months, year, to maybe in Robert's timelines, 10 years? What does that look like, from an individual institutional point of view? We can start with Martin and we work down that.
Martin?
Okay, so it's on me. Yeah. So hey, what I believe is kind of we, I think, first of all need to be we need to prove that we are the right partner for the Sky ecosystem and the Sky community. So I think now it's for us to deliver, and that's what we are focusing on short term. And then I think long term, it's really kind of adding more infrastructure, actually more liquidity, and also I'm pretty sure stuff beyond T-bills.
Yeah, agreed. Carlos?
Well, for us, obviously, first make sure everything works well and the integration is successful, and all the minting and everything, and the USDC investment, and everything works well, and there's no issues. Hopefully, we haven't had issues so far, and we are close to 2 billion, so that should be manageable. But nevertheless, this is a large volume coming at once, so we need to make sure we handle it correctly. And after that, I think that we'd like to work with the Stakehouse team and everybody to think about what's next, right? Because now you have treasuries and you have an allocation, but Sky is now a much bigger protocol with 5 million plus. So I'm pretty sure as you guys go down into the list of things that you want to go there, as I mentioned, maybe a slightly higher yield, maybe a slightly less liquidity, etc. Like what else can we bring to Sky to provide the proper backing, right? So I think that's for us the next step in the project.
Thanks, Carlos. Robert?
Yeah, I mean, I'll echo what Martin and Carlos both said, which is, step one is make sure that what we're all doing together is successful, right? From a technical perspective, from a market perspective, from a user perspective, we start here. And then I think a lot of it comes down to what, the Sky community wants, what benefits the protocol the most, what, increases yield and the ability to create a savings rate and create all of these things with the least amount of volatility and the least amount of risk. And I think that's going to be a very long-term conversation. At least I say that as, just participant in governance. And I don't think there's going to be one answer. I think there's going to be many answers, and there's going to be different answers over time. And I think, starting from here, maybe the next answers will more T-bills. And then beyond that, it's, well, you know, given the liquidity of, how all this works, maybe there could be a little bit more duration, applied to it, or maybe a little bit more credit risk applied to it. And we'll see. I mean, at Superstate, we're just here to support, whatever the Spark and Sky ecosystems are looking for and, need access to.
Awesome. Thanks, Robert. Sam.
Yes.
I caught you there. So, Sam, obviously it's all coming to fruition on the 7th. It's been a long time, obviously, in terms of concept, rollout, selection, and now on the 7th, big movements. What do you see the next 3 months look like, and maybe a bit of a longer view on how this Grand Prix is going to be rolled out?
Yeah, so maybe some people think this is, investing in T-bills, but who cares? But like this for me has been like a long time coming with my involvement in Maker. I've been around since 2021 when DeFi was just getting started. And like personally, I've always just been very interested in building a better banking infrastructure on chain. And so part of that involves having completely transparent loan supply chains across the entire way. And so moving all these supply chains on chain, but the interface, in my opinion, for real world assets should be the simplest possible construct at the interface into the regular world, and such that it can be highly regulated, very simple. There's nothing really that can go wrong there. And then you get into DeFi land, and you can have a fully auditable, transparent supply chain, so that when people are in investing into various products in the space, hopefully they do USDS, but I envision there's just going to be a huge amount of variety available, especially as we get more of these primitives on chain. They can be fully aware of what they're investing into, and with help of tools like AI that's becoming very popular right now, people can completely know what they're getting into, as opposed to some of the issues in the past in TradFi with opaqueness leading to things like the financial crisis of 2008. We can get rid of those types of issues, and these systematic issues that were hidden can be fully exposed to everybody, so we can help reduce the amount of systematic risk in the future. And this is it's a big step towards that, in my opinion. And so I'm very excited to get this online, and we'll be ramping it up very quickly and growing the market. And I'm excited to continue working with all of these three great partners. If it's not even under Spark, the sub-DAO model will allow for experimentation with other sub-DAOs. So I think there's just going to be lots of collaboration. And we're probably just going to try lots of different things, to be honest, under different sub-DAOs. They're going to have different risk appetites. And so the model is designed to explore multiple growth paths independently. So, yeah, very excited for the future.
Awesome. Thanks, Sam. Very conscious of time, guys, and I know that you all need to run. So once again, thank you for taking time out of your very busy schedules and joining us on the Spaces. I will probably harass you again for another Spaces follow-up in a week's time. So apologies for that in advance. But just maybe give some final thoughts just from each of you, and then we can look to close up. So Martin, let's have some final thoughts and move on.
Yeah, super excited for the future. And I think, building more and more of the financial value chain on chain, and basically giving people not just, I think, less systemic risk, but also most likely more value back, which is today captured in the financial system, is a great opportunity.
Exactly. Thank you, Martin. Carlos?
Yeah, I just want to say thanks to the Maker Now Sky team for the Spark initiative. I think this has been hugely important to stimulate the industry. And not only this 1 billion is going to make the tokenized treasury market grow very quickly in one shot, but I think that they basically are telling the rest of the world, as one of the oldest DeFi protocols, that these things are kind of like ready now to be used. And them being kind of like an early adopter at this scale, I think is very important for increasing the adoption across other protocols and other applications.
Yeah, and I always think a billion has a nice sounding ring to it, doesn't it?
It does.
Okay, Robert.
Yeah, so I'm excited to work with Spark and Sky. I mean, I think this is an incredible vision for how the world will work, which is marrying the best of off-chain assets and on-chain DeFi protocols. And there's a lot of work ahead. I mean, if we're beginning this April 7th, we're going to have months of proving out and reporting and creating the visibility for the community about like how it works and why it works, and that's going to be the exciting part because I think we're going to start to prove out this model. And so there's a lot of good things ahead, and I'm really excited just for these communities to all learn from the process and become more sophisticated and level up in how we think about this stuff as we go.
Yeah, exactly. And I mean, it's exciting to be sitting on the crest of what is going to be the future of basically, deep entrenched value over a longer period of time. So thank you so much for being part of this spaces and obviously being, participating in the Grand Prix tokenization event. So thank you once again. All right, guys. So we're going to look to wrap up. For all our listeners out there, thank you so much for listening in and taking time to hear exactly what's going on in terms of the amazing new developments that finance is obviously going to take shape over the next few days. It's going to be a big day on the 7th of April. $1 billion is not any amount to snigger at. So yeah, it's an exciting time. So guys, thank you so much for dialing in. Sam, thank you very much. We'll speak to you soon. And yeah, we'll have another Spaces next week. Thanks, guys.
Thank you
Thank
so
you.
much. Bye.